Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hypha Labs, Inc. annual report. Hypha Labs, Inc. market capitalization of $0 billion is materially smaller than most of its industry peers of roughly $1 billion. Hypha Labs, Inc. trades at a lower price-to-book ratio of -2.21 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 290% of total assets. This elevated debt level warrants heightened caution, as it may limit financial flexibility and increase risk during economic stress. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This also raised the question if that management is diluting shareholders to sustain the business. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. Hypha Labs, Inc. is a research-driven company that specializes in the development and commercialization of innovative technologies. At its core, the company focuses on creating bioreactors that accelerate the production of beneficial mushrooms for human consumption. The flagship product, Hypha MicroPro Bioreactor, is a home appliance designed to simplify the process of cultivating edible mushrooms. The company's primary business involves the research and development of cutting-edge biotechnology solutions. By leveraging its expertise in this field, Hypha Labs aims to provide customers with efficient and effective ways to produce high-quality mushrooms for personal consumption or commercial use. Hypha Labs, Inc.'s stock price has seen a significant surge in the past year, with a reported one-year change of 47.4931%. Several key developments within this period are believed to have contributed to this increase. One notable event is the strategic partnership between Hypha Labs and Triptomics, launched in October 2025, which aims to combine their technologies for enhanced fungal genomics capabilities. The company's pivot from cannabis testing to bioreactor technology has also been a significant factor. In August 2025, Hypha Labs completed the sale of its cannabis testing subsidiary, Hypha Labs, marking its exit from this industry. This move is expected to allow the company to focus on the research and development of its MicroPro Bioreactor, a home appliance designed to accelerate the production of beneficial mushrooms. The launch of functional mushroom ingredients in October 2024 has also been seen as a major milestone for Hypha Labs. The company's investor engagement efforts, including an investor presentation released in September 2024, have likely helped to raise awareness and interest among investors. Additionally, the scaling of production and patent applications filed by the company are expected to contribute to its growth prospects. While these events may have contributed to the stock price increase, it is essential to note that financial challenges, such as burning cash with zero revenue and acknowledging substantial doubt about its ability to continue as a going concern, have also been reported. These factors typically have a negative impact on stock performance, suggesting that the relationship between these events and the stock price increase may be more complex than initially apparent. The primary drivers of revenue growth or decline in the mushroom-based products industry are multifaceted. On one hand, revenue growth is driven by the introduction of new and improved products, customer acquisition and retention through cost-effective marketing efforts, and repeat purchases from existing customers. Additionally, high levels of customer engagement, increasing popularity and acceptance of mushroom-based products, rapid development of innovative products, and advancements in biotechnology and mycology all contribute to revenue growth. On the other hand, revenue decline is driven by various factors including government regulations, seasonal fluctuations in consumer demand, downturns in the general economy, shift in consumer spending habits, financial health of customer base, availability in terms of additional financing, and competition from established companies. These factors can have a significant impact on the industry's revenue growth or decline, making it essential for businesses to stay adaptable and responsive to changing market conditions. The net income of the company experienced a significant decline between 2024 and 2025. In 2024, the net income was -$785,429, but it dropped to -$3,101,901 in 2025, resulting in a decrease of $2,316,472. This substantial drop in net income is likely due to various factors such as insufficient cash reserves, recurring net losses, and dependence on additional capital. The profit margins of the company are also expected to be negative, given the significant net losses incurred. However, there is no direct comparison available between 2024 and 2025 profit margins. Nevertheless, it can be inferred that the profit margins may have been affected by factors such as decreased consumer discretionary spending, increased promotional activities, and growing use of online ad-blocking software. The reasons behind the decline in net income and potential negative profit margins are multifaceted. The company's insufficient cash reserves and recurring net losses have created a challenging situation. Furthermore, the dependence on additional capital to achieve sustainable revenues and profitable operations is a significant concern. Additionally, issues such as merchandise returns and changing payment card association rules may also be contributing factors to the decline in net income and potential negative profit margins. The company's financial performance has shown a significant improvement in its ability to generate cash from its core business operations. In contrast to the previous year, where it reported a substantial loss of $1,548,998, the company has managed to turn things around and report a positive operating cash flow of $10,818 in 2025. This marked shift indicates that the company's efforts to optimize its operational efficiency have been successful, allowing it to generate sufficient cash from its core business activities. The company's financial situation has undergone significant changes in terms of debt level and interest expenses. One notable change is the decrease in interest expense, which dropped from $169,267 to $106,143. This reduction suggests that the company has managed to lower its borrowing costs or reduce its debt obligations. However, another aspect of the company's financial situation shows an increase in debt. The notes payable account has risen from $0 to $315,678, indicating a significant addition to the company's liabilities. Furthermore, the loss on extinguishment of debt has also increased, rising from $1,827,027 to $3,001,408. This increase suggests that the company may have incurred additional costs related to its debt obligations. Overall, while the interest expense has decreased, the company's overall debt level and associated expenses have actually increased. Management is shifting the company's focus towards developing and commercializing an accelerator for producing nutritionally beneficial mushrooms. The goal is to disrupt traditional methods of mushroom production by bringing lab-quality nutrient ingredients into the home with convenience and efficiency. The company plans to continue designing, developing, and testing the Hypha Micropearl Accelerator over the next 12 months. By the end of 2026, they aim to commercialize this product, which will be sold primarily online directly to consumers through a subscription service for regularly scheduled deliveries of replacement cartridges. Significant investment is planned for customer acquisition through marketing efforts. Long-term success depends on developing new and improved devices that meet consumer needs and preferences. This strategy indicates the company's commitment to innovation and adaptability in the market. The company has made significant moves in its business operations through acquisitions and divestitures. In terms of acquisitions, the most notable transaction is the asset purchase agreement with Invictus Wealth Group on December 8, 2022. This agreement involved the purchase of collateralized equipment for $900,000. On the other hand, the company has also made a significant move in divesting one of its subsidiaries. Hypha Labs, Inc., a wholly owned subsidiary, was sold to an unknown party on February 20, 2024. The company has a history of paying dividends to its shareholders. Specifically, it has paid dividends on both preferred shares and common stock. However, the payment of dividends was limited to Series A and B preferred shares at one point. On the other hand, there is no clear indication that the company has bought back shares from the market through open market repurchases or tender offers. Instead, it appears that share buybacks have been achieved through alternative means, such as issuing new shares to consultants and board members, repurchasing Series C preferred stock at a fixed price, and granting options to an outside consultant. That concludes the financial summary for Hypha Labs, Inc. Feel free to comment below, and I will be happy to answer them when possible.